Hello and welcome back to another episode of Pizza and Property. My name is Todd Sloan and today we're going to be talking with a gentleman that's flown all the way here from Newcastle to tell his story on how he started with practically nothing 7 years ago to building a $4 million portfolio. And we're talking about building this on pretty reasonable wage, but the secrets to Blake's success, the details to his story, and the way that marching to the beat of his own drum has just turned the guy into a marching band. You see for yourself in a minute. I don't know if marching band is the way I should be describing Blake, but let's just go with it for now. We'll talk a little bit about what lit the spark for him. But the main things that I really want to dive into with Blake and really unpack for you guys is the fact that he's now up to something like 9 rental properties. I think it's actually 12 assets. So he's got some blocks of land, developments that he's working on, but these are all purchased regionally. The real kicker here though, is he didn't start this 20 years ago. He started this about 7 years ago. I think it's 2016. He's never paid more than something like $290,000 for a property. But these are properties that he would buy for something like $290 and then they'd get revalued for $400, $500, $600. He's adding value. He's having market uplift and he's got insane yields. This is coming from me. Like I love chasing a good yield. Don't mistake that for a second. Most of my portfolio yields at around sort of like 8 to 9% on purchase price. But one of the things I liked about Blake's story, apart from the fact that he just seems like such a just like Aussie dude to actually talk to, very straight up and down, genuine bloke. But I like that he's done it, he's still doing it. And this isn't a 10 years ago, 20 years ago story, which I still love talking to people that have done it a long time ago. There's a lot we can learn from them. Like, don't want to discount that, but there's just, I don't know, something more special about like, hey, what do you mean you did this like 6 months ago? You did that one 2 years ago? I made this episode specifically for you if you're listening right now and you're just needing that little kickstart to get going. You know that it's possible to do it, but maybe it doesn't feel like it's possible for you. I hope that listening to Blake's story gives you that little bit of oomph to actually go, no, like, wait a second. This guy's done this through hard work, grit, determination, sacrifice, all of those wonderful buzzwords we love to throw around, but he's actually done it. So let's talk with Blake Huddleston about how number 1 linked to 2, how number 2 linked to 3, 3 linked to 4, so on and so forth. Talk about investing in friendships and family, talking about setbacks and how he overcomes them, and so much more. But just before we get into the chat with Blake, got to read a very quick sponsorship message. If you're on the hunt for an investment property, whether it's cash flow, capital growth, development, renovation, whatever it is, you need to try suburbsfinder.com.au. You can search by rental yield, average capital growth. You can search by like pretty much anything you can think of. You can search by it. You can filter suburbs, overlay them side by side, like on top of each other to get a direct comparison. So if you're looking at 2 areas or even up to 5 areas, you can overlay the data so you can get a clear picture of what's right for you and your investing goals. So select your next suburb like a pro and give Suburbs Finder a go and get to know that's a lot of rhyming, but get to know the tool that a lot of BAs are using to select their suburbs. Click the link in the show notes below for a free trial or get 15% off if you sign up. But right now, let's get into the episode with Blake Huddleston and find out how this man has built a $4 million portfolio buying regional properties over the past 7 years. Blake, you're in the studio. How you going, man?
Yeah, it's good to be, man. Doing well.
Mate, this is exciting. You're one of the very first episodes we've ever recorded in this space. You've got a very unique story, which I'm super pumped to actually unpack and share with the whole audience. But before we actually jump into everything, do you mind if we just start with a little bit about you, man? Like, what actually lit the spark on the property investing side?
Nothing really, to be honest. I just, worked hard when I was younger and, just knew that I didn't want to work a 9 to 5 my whole life.
Okay.
Pretty much saved up a lot of cash, bought my first one, and then had some left over as well and thought, well, rather than have it sit there, you hear, family, friends talk about when you're growing up that, oh, he's doing well, he's got a lot of property, or, you see someone walking down the street or on the news and, they got a property, something like that, or, real estate agents driving really nice cars. And I thought to myself,
okay,
well, it seems like a good avenue to sort of make some, more money, and just thought that it's what I could do. So there was some cheap properties around at the time, and I just thought, well, yeah, might as well spend some extra cash on that.
So it wasn't like a friend or an uncle or someone that's like, hey, this is the person I look up to. It sounds like it's like a collection of experiences.
Yeah, so there's only one person in my family up until sort of recent years that actually had more than one, and that was my grandfather. He had a couple, and then he got rid of them, got out of it, put his money elsewhere. But pretty much up until me, there was my mum owned her own owner occupied, and my dad did too, and that's it. There's nothing really like.
So why property though? Like, because I hear what you're saying, but why not the stock market? Or why not?
I didn't really understand shares, and when I was growing up, my parents brought what they could, and it was a bit of a rough one in the town we lived in, and obviously had to renovate it to do well. So my brother and I, we grew up renovating after school, helping Dad where we could, you know what I mean, that sort of thing. And yeah, it's just sort of what I knew. Grew up sort of being a bit hands-on with that sort of thing.
And so renovating's been a big part of your strategy, hasn't it?
Massive, yeah. Predominantly that and subdivision, yeah.
Okay, so one of the things I really wanted to unpack with you is the fact that you've scaled to quite a very respectable size, but how renovating actually fits into that as well, because most people get stuck at 2 or 3. Yep. What was that key? And if it was renovating, can you expand on really how you utilised it to continue to grow? Yeah,
so for me it was buying cheap ones. So like I said to you earlier, I've never bought anything over 300,000. So you go to regional towns and you speak with people and they say, oh, you don't want to buy in that area. I wouldn't live there, or it's a bit of a rough spot or shit show or whatever. I love hearing that sort of thing because you go into those places and you're picking up properties for 150,000.
Yeah.
And my biggest philosophy whenever I've done it is that whilst you or I may not want to live there, someone does, and someone will. And that's how I always seen it. And at the end of the day, if you go into somewhere, say you make a purchase of 150,000, you pay a 20% deposit, gets down to 120, whatever it is, and then you go and spend 20,000 renovating it. 2 or 3 years' time, it could double in value, and you could get $380 a week, which well and truly covers the mortgage, the repayments, and you've got excess cash to then use for your next purchase, and then you go to a bank and they'll use everything on top.
Take me back to that first purchase. So 290, I think you said, was the most,
yep.
And that's the most expensive property you've purchased?
I've ever purchased outright, yep.
Okay.
On my own, yep.
And so take me back to that, because most of the education out there is very much against what you've done and what you are doing. What gave you the confidence to go, nah, bugger that, I'm going to do it this way?
Well, ideally I wanted to live where my family and friends were, but I wasn't going to pay it. I sort of bought to a price and what I could get, and I had to, I bought at the time, it was about 40 minutes away from my family and friends.
And whereabouts is that?
In Cessnock, in the New South Wales Hunter region.
Yep.
Wine country, all that sort of thing.
I've never been, but that's quite pretty down there, isn't it?
Absolutely. Yeah, good part of the world. Very self-sustainable. It's got everything you need. We just had Taco Bell turn up, which is good.
Everything you need now.
Absolutely, man. Yeah, door's shut. But no, so I bought there, like I said, away from my family and friends, but it was a good, solid house, 3-bedroom, sunroom, office. It's got carport, garage, entertainment area covered, stencil concrete. I think it's on about 570 squares off the top of my head.
Okay.
And yeah, at the time, 290 was a really good buy for what it was.
And when you say at the time?
That was 7 years ago now.
Okay.
Yeah,
2016-ish.
2016, yep. So bought it, and yeah, pretty well. I only spent in the last, I think I've been back a couple of months, just giving it a freshen up. I think I just spent 12 grand on it, just doing carpet, paint, put some fresh appliances, door handles, things like that.
So not a full reno, like a light cosmetic kind of.
All it was just to, give it a bit of love. Yeah, just hadn't had any love really apart from general maintenance. And the rental appraisal now is about 550.
Okay, so on purchase, what are you looking at there? Like an 8% yield?
Yeah, about that, yeah.
Around there?
And the value of it is 605 to 610.
Okay, so you've doubled in 7 years.
Yep.
And you've got an 8% gross rental yield on purchase cost.
Yep.
Okay, all right. But so as far as the confidence to move ahead with it, you're explaining an amazing purchase, but I'm just picturing someone that's totally new going against the grain for everything.
At the time, I wasn't really influenced by anything because I wasn't really, I'm not one of those people where I grew up reading about property. I just sort of bought where I could afford, and I knew that, because at the time I was buying, looking to have a family with no real intention of moving out of that one. I sort of bought it with the intent to stay there for a while. Obviously things changed. Some would call it luck. You know what I mean? COVID was great for it. We had a massive boost over COVID, but that first one, there was no real intent for it to sort of grow. My second one was where my intent sort of changed. I sort of started buying more, looking for growth and uplift and things like that. Yeah.
Talk to me about that. How you actually evaluate a deal then? So first one was a little bit of luck?
Yeah, I would say the first one's a bit of luck. The second one was when I sort of started getting more strategic and started really looking and analysing things.
Mm-hmm.
And that was, so it was 1,180 square metres.
Okay. What year was this?
2017.
2017.
Yep.
Okay. So you didn't wait too long.
No, I had a fair bit saved up, so I didn't use everything that I had saved up over the previous 3 or 4 years from working. And I was really lucky that I stayed at home with mum and was living really cheap, saved up heaps. Obviously, knew I wanted to buy, so I didn't spend everything I had. And then the second one I had pretty much, again, was buying to a price. I pretty much just went to the broker and said, what can I get? Just tell me how much I can get and I'll figure the rest out. So
can you talk to me about income then? Like what were you doing for work then?
I was driving cranes, rigging and driving cranes at the time. But I was really lucky that the company I worked for, they had copious amounts of work. So I was working Saturdays, Sundays, you know, as many hours as I could. And I'd done that for about 3 or 4 years.
How many hours is as many as you could?
3 shutdowns I was doing 12-hour days, 7 days a week.
Jesus, mate.
Yeah, with the purpose, obviously, that I wanted to buy, and I've always done that. I've always worked as much as I could. Missed out on so much, but that's something that I knew that I didn't want to work a 9 to 5 my whole life. I knew I wanted to be sort of run my own race and work when I wanted to and do what I wanted to do.
Yeah.
And that was where property gave me that avenue, really.
I'm still trying to work out what pushes you, because most people it's either it's a carrot or a stick. And so far it doesn't sound like it's much of a stick. It's more of a carrot. It's the wanting for more in life.
To be honest, if you ask friends, family, it's just me. I honestly to God, I don't know. It's just, to me, once I set myself a goal and a target, nothing else matters. And I set myself a goal when I first started investing.
Yep.
And it became that I wanted 10 by the time I was 30.
Okay. And how old are you now?
28.
Okay. And you've already got it?
Pretty well, yep.
Yeah. Well, portfolio breakdown. I think you said something like 9 rentals, but 12 properties.
Yeah.
There's a bit of a mix up there, but
so that's because I've got, tried different avenues to, different things. It's not just buy and renovate. Sometimes it's been buy, subdivide, then develop. Like I said, that one in Queensland, I've got where I bought it. I bought it started this year.
Mm-hmm.
Just got it back from approval for a subdivision.
Yep.
So now progressing forward with that. That'll get another duplex on it. And this one that I'm working on in regional New South Wales as well, that's literally just waiting on to go ahead, really.
Okay, so circling back a little bit, I feel like I've taken you off track there. Talk to me more about the deal. So you said 2017, 1,180 square metres.
Yep. So it had a 3-bedroom bucket of shit on it. It was terrible. My old girl was lucky to make it from the front door to the back door. It was pretty bad. Yeah. Dogs inside, you name it. And pretty much all I knew was that it had rear lane access. And when I'd done my research, I'd found out that it had a lot of land at the back of it, just looked like bush, but it had actually been divided and broken down into lots.
Did the agent tell you this? Or
no, I just figured it out. I not figured it out. I actually done my research, went to council, checked on maps, you name it, all that sort of thing.
Yeah.
And obviously, because I knew I wanted to develop and subdivide it, I actually, you can go and it's pretty easy to find stuff online, and found out where the gas was, water, all that sort of thing. And ended up finding out that a lot of the mains that joined 2 big sort of towns actually ran in the back lane, which was really good, nice and short access to all the main things that you need for a development.
For anyone that's a little bit new on the developing side of things, can you just open up a little bit more, just as a quick side note, as to why that's so beneficial?
Because obviously when you do a development, the make or break comes in your services. So if you've got to run services a long way, it can be, $100, $120 a square metre, a linear metre, to get it there per service. So if you've got 3 services, sewer, water, power, it could be $300 a metre to get them all there. And then if you're running at 100 metres, 3,000.
There's 30 grand.
Yeah, 30 grand. You know what I mean? It sort of can be the make or break in your development from a feasibility perspective. So having them so close was really, really good for me.
Out of interest, did you say anything to the agent, or you kept that under your hat?
No way.
Yeah.
No, that's
okay. Good.
No, that's their problem, really. Yeah, that was a funny one. The agent actually paid $1,000 to get the deal done out of his own pocket. Yeah, I know it's odd. So I was set. It was like 170. I was set. I said I wasn't going below it.
Yep.
I wasn't going above it. And the bloke was at like 171. He was just really being hard to deal with. And the agent's like, help me out here, mate. I just need another grand. I said, mate, you're not going to get it from me. He goes, nah, I'll just pay it. Yeah, so. The
funny thing was, it was still an amazing deal, even if you did pay it.
Yeah,
but
that's just me, though. Once I'm set. Nothing's changing it. I was there, and it was just, I think it took me about 6 weeks to get that one done.
Okay, and so back to like the evaluation side of things then. So it doesn't look like you're going, all right, spreadsheets, boxes ticked, like this kind of thing. You're just basically looking at it as an individual property and going, how can I add value?
Yeah, so a lot of it comes around rentals, like returns. So I'll base a lot of my stuff on rental returns because at the end of the day, long term, rentals is what's going to pay me an income to be able to live without having to work.
Gotcha.
The equity growth is great, but
Yep.
that just means that I can keep going and further. But yeah, so I'm looking at that sort of deal and I'm going, okay, well, I can take 1,100 squares, cut it in half, put a duplex down the back, 3 rental returns. My actual numbers that I wanted to achieve, I wanted the block to return me $1,000 a week.
$1,000 a week, and you're buying it for 170,000.
Yeah, no. So that was my end goal. Once I had the house and then I built the duplex down the back, that was my goal. I wanted it to return $1,000 a week.
Okay, gotcha.
Yeah, it's doing 1350 now.
And what did you need to spend to get it to that with the duplexes?
Yeah, so the subdivision cost me 60,000, and then the duplex bill was 450.
Okay, so we're looking at 450 plus 170 plus the 60. I'm not going to be able to pretend to do maths, and my phone is on flight mode over there. So what are we looking at all in?
So
around 600 and something?
Yeah, 650 thereabouts.
650-ish?
Yeah.
Okay, so 650. So again, you're now that's like a 10+% return.
Yeah, and those...
Plus you got depreciation on the new dwellings.
Yes, correct. So upon completion of those, so that I didn't do the development straight away.
Okay.
It took me a few years to get there because so I done the subdivision straight up.
Yep.
Got the block, got it through council. That was great. Went to do the development, but there wasn't enough equity in the land to warrant the build at the time.
Okay.
Okay, so the land value wasn't enough for me to go to the bank and for them to give me the money. Does that make sense?
Yeah, it does.
So I walked away from that one and just and left it there. Okay, went regional for work, things like that. Moved out to Gunnedah.
Yep.
Good spot, Gunnedah. Yeah, really
everyone
good.
always says that with such a tone of sarcasm.
Yeah,
I've never been to Gunnedah.
No. Good. Gunnedah was really good to me.
Okay.
That sort of Gunnedah was really good. That's when the renovating and that really come in. It was through COVID.
Yep. And for anyone that doesn't know, Gunnedah state-wise, can you give us a little bit more description, location?
So sort of central western New South Wales, north central. Yeah, a bit of a. So if anyone knows Tamworth Country Music Festival.
Yep.
Gunnedah.
Golden Guitar.
Yep. Golden Guitar. That's it. Yep. 45 minutes, sort of southwest from there.
Okay. All right. And what's like sort of local median house price? What do people expect on a general basis?
Gunnedah's really weird. So it's got like a 2-tiered sort of split in half, if that makes sense. So it's a golf course.
Yep.
If you go sort of eastern side of the golf course, you look at median house price of 450.
Okay.
Thereabouts, which is 450, 500. But if you go south side of the golf course, you're talking like 200, 250.
And how much does that change as far as let's just say socioeconomic conditions?
Massively. Yeah.
Yeah. So there's a reason it's cheaper.
Yeah. So a lot of them are ex-housing commission houses south side of the golf course.
Yep.
But a lot of people, when I first moved to town, they said, "Do not buy there." Anyone tells me I'm probably going to do it, so I did, and I paid 150,000 for my first one. The day that we heard that we could be going into lockdown.
Yep.
Like the first came out on the news, we could be, we're not sure yet.
I remember that.
Yeah, I walked into the house and I said, I'll give you this. And I offered them 150. They said no, and they pretty much come back and said, we need 155. Now they had 175 on it. They said, we'll take 155 now. They give me their story and I said, done, I'll take it.
And this is purchase number 3. Okay. And so again, when we're looking at evaluating the deal, you haven't talked to me about spreadsheets. You haven't talked about...
I still don't have one.
Okay. So if someone wants to emulate what you're doing, and they've already clicked with your story, and they're like, well, actually, I'm a bit more regional, comfortable with regional. Yep. I'm not approved for any more than maybe 300,000 now. Yep. This is all really clicking to me. Yep. How do they try and emulate what you're doing?
Give me a ring. No, a lot of it is don't listen to you. As odd as it sounds, you don't listen to people. You know what I mean? If you think there's value in a deal or think there's value in a property, like there could be a property in a bit of a rough spot, but you think it's got potential, or back yourself. At the end of the day, that's all it is. Back yourself, have a crack. If you think someone can rent there or wants to rent there, it might not be you. But if you think someone will, or you think there's a need for people to want to live there, or if you think there's expansion out the back of a certain area that this place backs onto, go for it. 150 grand you're going to lose. At the end of the day, everything goes up over time. It might take you 10 years, but it'll go up eventually.
That's pretty much my thoughts as well. On the very first one that I did, I remember I bought it for 62,500.
Yep.
And my justification was if I stuff up that badly, I basically just need to give up 3 coffees a week, and there's the mortgage repayments. Like it's
Yep.
what's
for someone to carry 150K So say you bought it and no one lived in it for 6 months, right, while you're renovating it. To carry that loan would be probably 200, 250 a week, roughly approximate, thereabouts.
Yeah, sounds about right.
Yeah,
Yep.
off the top of my head.
Mm-hmm.
A lot of people, you know, if you make a few sacrifices, you could probably carry that. Or you could get someone in there paying 250 a week. In today's current market, you're going to find someone that wants to rent it for 250 a week.
Does it feel like sacrifice to you, or are you that focused that it's just like, it's what I do?
No, see, to me, that's what it's always been. It's always been like a sacrifice thing. Like I was happy to sacrifice like your nights out, sacrifice holidays, all those sorts of things. You know, I missed a lot of birthdays, you know, from my kids, parties, those sorts of things, family dues, whatnot. I missed a lot of that. Whether it was working, renovating, whatever it was, it was my way. It was what I call a sacrifice, yeah. That meant me sacrificing those times in my early days meant that it was going to benefit me and be more beneficial in my later years, yeah.
So it's just very much long-term vision.
Yeah, pretty much, yep.
Okay, so it's not that I enjoy it that much that it doesn't feel like sacrifice. It's more about I'm that committed to what's going to be in the future that I'm happy to sacrifice. Sort
of a bit of both. The long-term thing is what it's predominantly about. Like I don't want to be, like I said, working a 9 to 5, having to go to work to make a living. I never wanted that. But I do enjoy it. I really do enjoy renovating. I enjoy getting hands-on. I actually enjoy the project management side of it as well. Yep. I love all that sort of thing. But yeah, to be honest, the more I do it, I just thoroughly enjoy it.
What's your favourite bit?
Probably finding diamonds in the rough.
I meant of like the reno process.
Oh, probably, yeah. But yeah, probably the design part, going and finding, so you see something on Pinterest, for example. Yeah. And you like the look of it.
Love right? Pinterest.
Yeah, same here. You know, files everywhere. But you go and find something, you look and you go, God, that's going to cost a lot. And then you turn around, you go to Bunnings or something like that, and you find them on sale, and you're buying them, then and there, and you're only paying like $15 a square metre.
You know about going to the centre of Bunnings as well on Saturdays for the sales?
Yeah, absolutely. Yeah, well and truly.
Love it.
And buying that sort of stuff, and then trying to emulate it in a way, but do it on a budget price. That's what I really like about it. Trying to make stuff look real pretty and real fancy on an absolute budget.
And you reckon you've got the pretty fancy down pat, or do you have like other people helping that as well?
I do a fair bit of it myself. I wouldn't say I'm great at it, but tenants like it.
Yeah.
And that's all that matters, yeah.
Love it, man. All right. Well, I feel like this has kind of gone in a few different directions at once, but you started kind of opening up on how 1 connected to 2 and 2 connected to 3. Can we start talking about how 3 connected to 4 and 4 connected to 5? Because let's face it, 3 is normally where people cap out.
Yep. So 3 was the first one in Gunnedah. So I did get more from the bank. So I was lucky I had a little bit of equity there. I got more than my purchase price because I wanted to spend a bit of cash on it to renovate it. Going through COVID, ideal time. Nothing else to do with your life. You're locked inside. Perfect. Let's renovate. So I had a blank canvas. I had, I think I got 25 grand extra I had that I wanted to throw at the renovation.
Okay.
Yeah, started ripping in. Put 25 into that, new kitchen, laundry, pulled walls out, new bathroom. We're talking carpet. We're talking paint throughout, polished floorboards.
And what kind of time frame? This is over 3 months, 6 months?
3 months.
Yep. 3 months.
3 months, yep. So got that. Once that was done, got it refinanced.
Yep.
Took out what I could. Same thing.
Was that a bit lower because of everything that was happening at COVID?
Just as it started to peak, like just as it started to really kick.
Okay. So like 2021 end of that kind of thing, or?
No, it was in COVID, so obviously it's 2020, and then I was really lucky that I already had equity there. I didn't pull out all of my equity, but it was when it just started to just trend upwards. It wasn't like the spike. It was when it just started to trend upwards.
Like end of 2020.
Yeah, end of 2020, sort of August, September. At this time, August, September.
Okay.
Just started to trend upwards, but I didn't need a heap. So pretty much same thing. I remember calling the broker because remember I had that land from that subdivision as well that I could utilise.
Of course, 1180.
Yep. But I had that had already been subdivided. So I had those 2 assets. So I had that land asset as well.
Okay.
Which was sitting there. But yeah, pretty much went to a broker again, said, what can I get? Tell me what I can get.
And so what are you doing for work at this stage? Like what's your serviceability?
Still on the cranes.
And you've just done a reno in 3 months though. Surely you're not doing 7 days a week anymore though. Have you kind of scaled things back?
So if I was working, if I was on the cranes, so say I'd go to work, right, and I go and do 6 to 6. If in those 12 hours where I wasn't at work, I was renovating.
How much do you sleep?
Whenever I could, I'd fallen asleep a couple of times with the paintbrush in my hand. And I hate painting.
You need to get one of these things, the whoops. They're good. Tells you when you actually need to sleep. I do it now. Sometimes I only sleep 5 hours a night, and I only do it until this thing's like, hey, stop it, and then I'll have a bit more of a sleep.
Yeah, no, that would have worked for me. I'd end up throwing it away.
Okay. Yeah.
I'll sleep when I can.
Probably not a good one then.
No, I sleep when I'm dead. But yeah, at the end of the day, I don't know. I'd rather be busy. You know what I mean?
Yep.
I'd rather be busy, and I do sleep, but I'm pretty busy.
So you're still doing 12-hour days?
Yeah, not always.
Okay, but regularly?
Yeah, often, 10s on average, yeah.
Okay, and you're smashing out the reno.
Yep.
So now you're going back to the broker.
Yep.
And so, because I was thinking maybe serviceability is not there the same way because you've
serviceability was still there.
Still there.
And remember, I didn't do all the renovation myself as well. So I was leaning on trades also.
Yep.
So it wasn't all me. So
you said you like the project management side.
I do, yeah. So it wasn't all me. So like plumbers, right? So if I had plumbing work, or the builder's probably the easiest way to put it. So if I had some building work that needed to be done as well, like stuff that was out of my control, like load bearing beams and wall moves and things like that, something that if I wanted to have a crack at, we could, but I wouldn't trust it.
Yep.
I'd get a builder in. So then while I was at work, the builder would be in there doing what he was meant to do, and then I'd come home and then I'd keep cracking on with whatever I could do post that sort of thing. Yeah, whether it be gyprock and having mates help me gyprock or whatever it was. But no, serviceability is still there. And then after that one, got out what I could, ended up buying one about 700 metres as the crow flies.
Okay.
Away from that one, still in Gunnedah.
Still in Gunnedah, yep.
Yep. It was 157,500 then.
Yep.
Yep.
Okay.
So still low.
Yep.
Yep.
So this is now 3 to 4. Okay.
Yep.
And so it's still in Gunnedah, and so serviceability is still good. And as far as equity that you're pulling out, you're leaning on 1 and 2.
Yep.
And a bit of the uplift of 3.
Yep. So leaning on the first one.
Yep.
And the second one, and the block of land, and now that one.
Right. So you're only getting like little bits from each, like it's 10 grand here, 30 grand there, that kind of thing? Or?
Yeah. So at the time, from memory, because I lean on, I don't get right into the nitty gritty. I pretty much just, once you build a relationship with a broker, I pretty much just give it to them. Say, make it work. Just do what you can.
Okay.
Get me out, whatever you can.
Yeah.
And then I'll figure the rest out.
You've been through a few brokers?
Three.
Can you talk to me a little bit about that? Because
yep.
I didn't want to leave my first broker because he actually became a friend.
Yep.
Still great guy, but he just is closed off a little bit.
Yep.
And then when I left, it was like I got told I was capped out at 300 and something, went to a new broker, and all of a sudden they're like, I'll get you $1 million. Yeah. And I was like, what? Yep. Like, can you talk to...
Yeah, so it's one of the biggest things to actually that I believe to being successful, to scaling, is finding people that sort of see things how you do. So the first broker was a family friend. He was really good. Honestly, he was great. I think I used him for my first 2 or 3.
Yep.
Yeah, 2 or 3. But I was sort of moving at a rate, obviously, that he was sort of just wanting to do, slow down, and was sort of going in the opposite direction. So he was sort of tapering off and sort of slowing down in his lending, I guess, and I was sort of wanting to push fast as I could.
Yep.
Picked up the phone one day and just called someone else because he pretty much straight him down, said to me that, you need to find someone who can help you out a bit more than what I can.
Mm-hmm.
So it's picked up the phone and called someone else and made a relationship with someone else, and he was awesome. He took me to another level. And then I think I used him for a couple. Then he went from working privately went back into bank lending, went to work for a bank.
Yep.
And then now I've got someone who is a really good friend of mine that I've built that relationship with him over the last couple of years. He's awesome. He literally, some of the shit that I go to him with, want to do, and he never says no. He just goes, all right, let's shake the tree and see what falls out. Let's see what we can make work. But he's awesome.
Okay.
So Jared at Crown Property Finance.
Okay, and so he's a bit of a wizard.
He's a gun. Yeah.
Okay. All right.
I shouldn't say that, but because his head's going to get massive. But he's an absolute gun. I trust him with a lot.
Always happy to give a shout out to a good broker, especially a problem solver broker, because one of the things that I learned very quickly, I thought that the bigger you grow, the more it's like, yeah, every broker's going to want to deal with you. And it's like, no. Every broker's going to go, oh, you're a problem. You're like 8, 9, 10 properties. I don't want to refinance you.
Yep.
So, or if it's not a complete refi, obviously a refi is a bit of a different story.
Partials are a pain in the backside for a lot of them.
Exactly.
Yep.
So if there's someone that's actually willing, able, and knowledgeable, absolutely someone that you want to have a chat with. But
yeah, well and truly.
Yeah. All right, man. But look, moving on from this, it sounds like the way that you really connect the dots is you don't stop working. Sleep is an evil that you try and avoid. You keep renovating to add value. You keep purchasing amazingly yielding assets. You very much do what you think is right. You don't follow any kind of trend. It doesn't sound like you haven't mentioned one other person of like this was the influence along the way. I know there was no influence to start with, but it doesn't sound like there was a podcast, a book, a TV show or whatever that really did it. You just do you.
Yeah, that's me. I just do what I want to do, and at the end of the day, if you don't like it, it's the door.
That's actually over there.
Yeah, either way. Yeah. That's just me, how I am. Yeah.
Well, I feel like we can almost skip this question then. So it was what gave you the confidence that Reno would actually give you an ROI? I just feel like we've already got the answer to that. Yeah, it's what you do.
Just figured it out in a run.
Yeah.
Make it work.
Was there ever any doubt though?
No, that's probably my biggest thing. I don't invest or buy with fear. I've got no fear. At the end of the day, I back myself and trust that my system and how I work it out works for me. It hasn't failed me yet, but not that I believe. So I don't invest with any fear. 'Cause at the end of the day, I'll just carry the debt. If it's not going to work, then I'll just find a way. There's always a solution to a problem. It's never like the world's never going to end. If something's not working, or if that's just the easiest way for me to put it. I don't believe there's always a solution. Always.
You ever had a risk profile tested on yourself? Skydive?
No, absolutely not.
Bungee jump?
No, I'd bungee jump, but I'd never skydive.
Never skydive.
I don't trust the pilot to get me there.
Okay. Fair enough, man. All right. Well, look, as far as investing in friends and family, I can't help but think that the way that you are as a person, like, how does that gel with everyone around you? Because you're not the normal dude. I mean that with all due respect. That's a compliment. Yeah. Like, did you find it like a little bit of pushback from friends and family, or how did that work?
No, not such pushback. I guess, I love talking about it, which is probably the hardest part for some people. Is I can probably sometimes come across a bit arrogant, but I'm really not. It's just I enjoy it, and I want everyone else to sort of around me to, if they're looking to get into it, give me a ring or have a yarn or whatever it is, because at the end of the day, it's
just love chatting property.
Yeah, absolutely, well and truly. It's probably frustrating to annoy everybody, but I actually really enjoy it. And I like to think it's rubbed off on a few people. Like I was mentioning the other day, my mum, obviously since I've gotten into it, we've actually purchased two for my old girl, 2 rentals now for her and her husband. Yeah, so they've got 2. I know my auntie, who was staunch and never against it, has even mentioned a couple of times on the piss, so who knows whether it's true or not, but she's even mentioned about, buying one now, so, and even a lot of my mates are starting to drive the conversation around, one of my mates just bought one in Cessnock, he's going to renovate it, spend 100K on it, and then it could potentially end up being a rental as well, so.
That's awesome.
These sorts of things that's what I love about it, is that being able to talk more openly about it with people and then open people's eyes in a way.
Absolutely.
Yeah.
I just know that sometimes people can find themselves surrounded by others that think, if I can't do it, then I'm going to try and talk you out of doing it. And it doesn't sound like you had anyone around that.
Even if I did, I definitely wouldn't listen to them.
True. Yeah. I can't see you being swayed easily. No. Yeah. What do you do when a salesperson calls you?
Depends. If I'm wanting to buy, I'll probably buy. If I'm not, I'll just hang up the phone.
Yeah, I thought so, yeah.
Car salesmen hate me.
You'd be a tough one to crack, I bet you.
Yeah, they don't like me. I'll walk out the door. I'll just go somewhere else. Someone will give it to me for what I want to pay for it.
Rounding out the questions, I've got a couple more on the list here, and one that I think would be a real interesting one, because you and I actually chatted about this off air the other day. Biggest setback that you've had, and how you solved it. Now, from what you said, it hasn't been solved yet. No, it's current.
It's ongoing, and it's an absolute pain in the ass. So the development that I'm currently working on, I paid 50K for a block of land with a DA already approved and with plans.
When was this?
I'm going to say 2021.
Okay. Because you know how crazy that sounds as a number to say, like, I paid 50K for a block of land with the DA approved.
No, not really.
Okay. That's not even stamp duty for most of the people listening.
They had 70 on it. It sat on the market for probably 6 months.
Yeah, okay. And where is this one?
In between the two in Gunnedah. So it's in Gunnedah, so whereas smack bang in the middle of them.
Okay. And what's the issue?
So issue is I don't want to do, so obviously when you enter into a build contract, generally speaking, it takes 2 years to completion. That's pretty standard with builders. I don't want to wait because the market's so hot out there at the moment. I'm trying to get it done nice and quickly.
Okay.
So I'm looking to go a modular route, do a modular prefabricated. They used to call them transportable, but modular is the term they use these days. They get made in a factory, transported to site on the back of a truck, lifted in, and then obviously connected to mains and all those sorts of things.
Yep.
So I want to do that because they can build them in 12 weeks, gets them to site pretty quickly, and I can get someone in the return and nice and quick.
And does that affect the end val very much?
This is the problem. They're not very common. When I mean not very common, I mean people use them as like granny flats or owner-occupieds.
Yep.
No one ever, well, not that I don't know anybody, and even when you speak to the modular builders and people, they don't really have developers or investors doing it because banks don't like it. It's not common practice.
Okay.
So at the moment, trying to get this one through in Gunnedah, I've done all the legwork on it, got all the costings and all those sorts of things. And the value is just keep valuing it at build price and land value, which doesn't benefit me because there's literally one that's probably 600 metres away, not even that, like two streets, whatever, and it's a 3-bed and a 2-bed on the one block, and it valued at 660.
And how much different is that to what it's actually coming in at?
Well, so mine to build them and the land value was like 450.
Right. Okay. So we're talking hundreds of thousands.
Yep.
Yeah,
So
okay.
we're a fair bit short, but what I've done is I've put together, Jared and I, we've put together a file and sent it off, trying to get an independent and like another valuer's opinion, just to see where it's at, because from where I'm sitting, it's same. Where he's sitting, it's same.
Is it just an as complete val problem?
It's as complete, but the thing is in the value, because the value is, they see it as a transportable modular. Because it's not built in situ, not built in place, they don't like them because they don't know how to value them. That's the problem. There's not enough of them around that they know how to value them. So pretty much it's either I come up with 450 grand, which, let's be honest, I'd love it, but I don't have it.
Okay.
I've got a bit of cash, but not enough to carry that.
Yep.
But yeah, so that's sort of where I'm at the moment, just trying to work the problem. Fingers crossed, I'm talking to an independent valuer tomorrow to try and see if they will value it at what I believe it should be valued at, or whether they can sort of, take their blinkers off and sort of see it for what it is.
Very interested to hear how you go with that one, because
So am I.
With the valuation then, if you did change it, and obviously it changes from 12 weeks to 2 years, which is huge, but would the chance of the valuation actually coming in as a comp as the 650, would that increase?
Yeah, so obviously what I would like is to obviously get it to a point where if a valuer can value it on an as completed val and get it somewhere up 550, 650, I would take 550, because being that it's inferior land size to the one that I've been using as a comparable.
Okay.
You give a little to get a little.
Yep.
As time goes by, I like to think that it would then value up again.
Gotcha.
Yep.
Okay. And plus then if you're making a 100K equity uplift, and I'm assuming this thing is a cash flow cow just because that's the way that you do things.
Yeah, so the 3-bed would be, I think it's about 40 to 480, somewhere thereabouts. I've got the appraisal on my phone, and then the 2-bed's like 380 to 420. So
it's not bad.
We're talking 800 a week or something like that, which isn't too bad.
Another almost 10% yield.
Yeah, I think it's like 9.06.
Yeah, who's counting?
Yeah, not bad.
Oh, mate. Well, look, as far as the problem solution's concerned, as much as there's not a solution to that, I'm sure you will find a solution, because you seem like a man that has determination written all over him. You probably actually even have the word determination on your arm somewhere there.
Somewhere, maybe.
You see you're inked up a bit. Yeah, love it. As far as advice that your younger self could have used, if you could go back and talk to 18-year-old Blake, what's the one thing you'd say?
Make the sacrifice. Don't be scared to make it, because at the end of the day, sacrifice then turns into determination and those sorts of things, and it's all about sacrifice. If anyone has scaled a property or anywhere in business or whatever they've done without making sacrifice, they're talking shit. It's all about sacrifice, and it could be like sacrificing, like I said, nights out to benefit your serviceability and savings. So if you're short on savings and your friends are going out, on the sip there for a Saturday night, don't go and waste the 300 or 400. It could be a holiday. Sacrifice spending the $2.5 grand on a holiday. Put it in the bank, save it up, and then put it to property or whatever it may be, whatever your poison is. But it all starts with a sacrifice.
Love it. And as far as an action step's concerned, mate, if someone's really resonating with this, they're going, okay, I'm in a similar position to Blake, or maybe I've got similar skill sets to Blake, I'm happy to sacrifice the way that you're doing. what's something that you would tell someone that they can just take out the earphones right now and put into action straight away to walk down a similar path?
Go and talk to a broker.
Okay.
Go and talk to someone.
And what are they saying?
Just go in and say, this is what I've got. This is what I've got in the bank. I want to do this. Or have a look at some property on real estate or domain. Find some cheap ones. You always got to start somewhere. You know, there's no point in going spending $500K on a rental if rentals ain't for you, because they're not for everyone.
Mm-hmm.
Investing in property is not for everyone. You've got to be able to live with the fact that you've got money sitting there tied up and someone else is living in your asset. Some people can't handle that. So go and speak to a broker. Don't over capitalise. Don't go spending $500, $600 if you're not sure. Go and try and find a cheap one. Buy within your means. Have a crack.
Love it, man. Well, rounding out to the most important question of the entire show, I need to ask you, Blake, what is your favourite pizza?
Barbecue chicken bacon.
Not even a wink of hesitation.
No, deep pan.
Okay, where are you getting it?
That's a good one.
Homemade, or this is somewhere special?
No, I'll crack Domino's. Domino's will be, mate. Yeah.
Of course you would, mate.
Yeah.
You're a value investor.
Absolutely.
Yeah.
Absolutely.
$5, yeah, cheaper Tuesdays.
Yeah, $7 if you on a Sunday. They'll charge you $7 or whatever it is.
Apparently they stopped that now.
Oh, well, I hope so.
I haven't eaten pizza in a little while, actually.
Yeah.
I'm on a bit of a strict diet at the moment.
I went yesterday.
Yeah?
Yeah.
What, Domino's?
No.
Oh.
No, I went to I can't remember, Remy's in town here.
Oh, Remy's. Did you have the deep dish pizza?
Yeah, man. Dude, it was.
How good.
Yeah, it was
Yeah,
very deceptive.
I remember, like, normally it's like, yeah, I'll eat like a pizza or two.
Yeah.
And in Remy's, it's like, no, I'll have like 2 slices because it's like proper pizza pie.
She actually recommended the 7 inches, not the big one. She goes, because you won't eat it.
And I bet you looked at her like, you have no idea what you're talking about.
No, I definitely agree with her, and I'm glad I did because it was massive.
Yeah.
Yeah.
It's bloody good, though.
Yeah, it was awesome. Yeah, well and truly.
Okay. All right. You guys got much else playing while you're in Adelaide?
Getting an Uber and going home.
Okay.
Yeah.
What? Straight after this?
Yeah, man.
Okay.
Out of here.
All right, Blake. Well, are there any final words of wisdom or anything you'd like to wrap up this chat with, mate? It's been awesome having you on the show, but is there anything exiting words?
No.
Just get out there, take action, talk to your broker.
Have a crack. Talk to a broker. Don't listen to everybody and do what you want to do.
Back yourself. That's a big thing I'm getting from you.
Yeah, absolutely. Back yourself. Don't be scared to have a crack and show no fear.
Mate, thank you so much for coming on the show, and have a safe flight home.
I appreciate it, man. Thanks for having me.
Okay, so for me, the biggest thing that stands out for Blake, 100%, is like just this bullish, it's going to happen. I was purposely trying to push for some kind of well, there was this one time. Just keep doing it. Just keep working. Just keep. It's like it really shows the relentless focus and how much you can really achieve with that. I remember I had this discussion, actually, it was the other day with Arjun Paliwal, and we were talking about this. And I had a few troubles going on, and I was having a bit of a chat with him. And I said to him that the thing that I didn't understand about myself was, this is actually a bit of an in-depth conversation, I won't go into all the detail, but if I was in the same issue now that I was like 20 years ago, well, maybe not 20 years ago, but like when I was in my like mid-20s, so it's more like 10 years ago. I don't want to be too harsh on myself. I would have just bullishly gone, that's it. And I would have just faced it. And that's what I do with most things. But with this, I didn't. And I feel like there's something in that, because those are the things that enabled me to start building the portfolio to begin with, that enabled me to walk from Adelaide to Melbourne, ride a bike across a continent. Like I rode from Darwin to Adelaide in 14 days. I had so many people. I had a professional cyclist telling me it was physically impossible. But I just had my blinkers on, and it was like, no, I'm doing this. Anyway, and the chat with Arjun was basically about tapping back into that feeling across like different layers of life instead of just having it in one direction. But I feel like on the layer of investing, Blake is doing exactly that. And if you want to put his success down to anything, I would say it's he thinks it's sacrifice. I think it's unwilling, like it's just complete determination. Sacrifice obviously comes into it. It's kind of like that argument of like what's more important, the brain, the heart, the lungs. It's like you kind of need all of them. But I think you could still sacrifice and walk around in circles. You could busy yourself thinking that you're going in the right direction, but you're actually not. But that absolute sheer single-minded, I'm going to do this, to me, that's that man's secret weapon. That's his superpower. And if you've ever thought, just anything in your life that you have actually had that single-minded determination on, this is why I referenced the chat with Arjun. Spend some time with yourself to try and replug or like repurpose that feeling into what you're trying to do. Whether it is property, I mean, we're a property podcast, so let's just say I'm property for now. And if you can plug that into property, the proof's in the pudding with this guy. Look at what he's done. 7 years, $4 million portfolio, like, and doing it in towns where I reckon 90% of the property investing community would call him mad, and maybe most still would. And you know what? Maybe he even is, but he's done it. And if he didn't do anything, even if it's not the best choice, fast forward the clock another 10 years, I'm sure it was better than making no choice. So whilst there's a lot to take out of this episode with Blake, and I really hope you listen to this one again, because I think this is one that it's not even in everything that's said, it's in the subtone of how it's said, of what this guy's doing, that the real takeaways are from. This person, what I got from this. And if you're thinking, well, all this is well and good, Todd, but I'm too stuck. Well, have you entered our Unstuck Yourself competition yet? I want you to be sitting right here across the table from me as we get all of the experts, well, not all at once, one at a time, on the TV, in the studio with us, like to get you unstuck. Click the link in the show notes below. Tell us where you are now, where you want to be, and what's in the way of getting you there. Because every month we're going to be flying someone from wherever you are in the country, not the world, sorry, everyone that listens in the States, not in the budget, flying you from anywhere in the country into the Pizza and Property studio, so we can help you get unstuck. So click the link in the show notes below and enter if you haven't. Or if you've got a mate that you're like, hey, Dave, you're super stuck. Remember what you were saying the other day? Flick him this episode, flick him the link and get Dave on board. Or even if his name isn't Dave, there's more people that can enter than just Dave's. But if you want to fast track all of that and you want to go straight to a BA, then get behind the people that support us here at Pizza and Property and head on over to investorkit.com.au, because now it's more important than ever to pick the right location. As the wise Warren Buffett says, be fearful when others are greedy and greedy when others are fearful. The smart investors know now really could be the time to get into the market. You just need to pick your asset with a little more precision these days. So if you want to buyer's agent in your corner, they're still picking strong markets and quality assets, get in touch with InvestorKit today. Go to investorkit.com.au and speak with Arjun Paliwal and his team about your property investing goals and let them explain their unique approach to help you get there. Take action, take control. You'll be glad you did. Talk to InvestorKit today. But I hope you guys are enjoying the new studio. My name is Todd Sloan. You're listening to the Pizza and Property Podcast. As always, have yourself an amazing rest of the week. Stay awesome.